For those of you who have been following me for a while, I like to talk about this Wyckoff schematic. It's called, I'll spell it out for you. It's called Wyckoff distribution. And all that is that you can think of the market going through phases where the price goes low, the price goes high, the price goes low. And so there are phases of accumulation where people are buying, big people are buying, and there are phases of distribution where latecomers to the trend are going to pick up, so guys that are in the accumulation zone, right? They're going to buy, the price is going to go up, and then it's just going to start tapering off. And then these guys that bought down here are going to start unloading their shares, their coins, whatever you're trading, onto the latecomers to the party. And then ultimately the price comes back down, and this happens over and over again. Just swings high, swings low, and this just keeps going indefinitely, really. So right now we are seeing what I believe to be another distribution phase. And I mapped this out like a couple days ago, and it's been pretty nice. So right here we see the preliminary supply, we see the buying climax here. The buying climax is noted by the peak in volume. I'm kind of just calling this whole thing the buying climax. You see the automatic reaction, the sign of weakness, and now we see the up thrust, which is a sudden shove above the all-time high to create a new all-time high and kind of spark some FOMO in the market so that people start picking up and buying. And basically the whole idea is that this guy Wyckoff, I forget his first name, I should probably know it, but he over years, back in like the 1930s, he observed market dynamics, and he observed the actions of big players, guys like JP Morgan, like big institutional investors, and he observed what they were doing in the market and how they were trading and how the trends reflected that. And part of what he noticed is that the market, so whenever you hear people say the market is making a test, or there's support here, or there is resistance here, you can think about it as like the guys who really drive the market, the quote unquote market makers. They're testing the market to see how far the price will go before they're going to say, okay, I'm going to bail my position, you guys can have it. And so part of the whole process of distributing their assets is that there are these series of tests, right? So there's it always starts off like this. There's like this preliminary supply phase where there's a little bit of pullback. And this is where this is the first sign of weakness in the market, is when supply is over dominating the demand. So, if you're thinking about this little scale, right? Supply versus demand. In a sideways market, they would be equal. In a downward market, the supply would be greater than the demand. And in an upward market, the demand would be greater than the supply. So right now, this little test where it peaks out and kind of pulls back, this is said to be the preliminary supply test, where this is a signal to the big guys, the big institutional investors, that the supply is starting to dominate the demand. So they start prodding the market to see how far they can drive the price before ultimately it reaches its peak, and then they can bail on their position. So that's why you see things like this, where it's just like out of nowhere, just huge market buys, out of nowhere, just huge market buys. And it's these, these big guys, these large institutional investors, these large hedge fund managers and such. They're I don't want to say manipulating the market, because I hate that term, but they're testing the market to see how far their influence stretches and how likely they are to make profit at different price levels. So you see this preliminary supply phase, the market pulls back, and all of a sudden there's just like this huge spike in volume seemingly out of nowhere, right? The price is it's very slowly just like meandering upward, and then it slows down, and then boom, huge increase in buy volume. So it goes up, and that's when you reach the buying climax. Okay, so this is the first test. This is to say, okay, on our first test, this is how far we got. And then there's a knee-jerk reaction in the market. They're like, oh, people freak out. They're trying to call the top, and then they sell. This is called an automatic reaction. And what the automatic reaction does is it's seeing how strong the bears are versus the bulls. as the automatic reaction kicks in, it's basically a test of the market sentiment to see how confident people are in these prices, and it develops this nice support level here, this blue dotted line, and then from there, you know, bounces up and it kind of meanders upward again, and until ultimately the institutional investors make a test of the absolute low, and this is called the sign of weakness. So they say, okay, we saw how low the bears are willing to push it. Let's see how far we can push it before the bulls step in. So they say, okay, here's the bear low. Let's see how low the bull low is. So they shove the price down, but it's just to see how low the bulls will buy. So they shove it down and the bulls buy, and it rallies. And you can see here that like there's a strong buyback, but it kind of tapers off until boom. This is when the upthrust kicks in. A lot of times you see a revisit of the automatic reaction zone. That's why I have this dotted line here, but it's not always necessary. Typically what you just see is you see a sudden injection of volume into the market where it shoves the price higher to a new all-time high, which is what we're seeing here. All-time high. New. Hot off the presses, right? And this is called an upthrust. It's called an upthrust because it's like, imagine you're pushing this boulder up a hill. Like I love this analogy, but it's I feel like it's really perfect. So you have this boulder, you're rolling up a hill, you're like this little man, you're like, this boulder's really fucking heavy, right? And as you start pushing it up the hill, it gets harder and harder the steeper it gets. And then ultimately, you know, it's not a gradual pressure anymore. It's, you know, you keep doing these like shoves. You're like shoving it to get it up higher until ultimately you give it one last shove, and then the boulder just kind of steamrolls you back down the hill. And that's what you can think of as right here. It's like we're getting to the part of the hill where it's getting very steep. The institutional investors can't really hold it up anymore, and so they give it one last shove to spark some FOMO until they sell off all their shares, and then the price just tanks. Well, it doesn't tank, but it goes through a corrective phase, you know. And if we go back to our ascending channel, like that's not what I wanted. If we go back to our ascending channel, we see that this just happens over and over and over again. It's like clockwork. So let's go ahead and I'll point it out here. So if we look here, oh, I can't zoom in on this. Let's look at the 12-hour. Okay. We'll go back through an historical example and check it out, because this happens over and over again. So actually, let's look at 6-hour. Actually 4-hour. So let's go back to a previous market activity where we can observe this, and we'll just compare it to the current price action. So we see here the price finds a bottom, it pushes up. And then you see the buying climax. Okay, so this is your BC. Let's make this smaller. Here's your buying climax. Here's your sign of weakness. Right, the price meanders, and then boom, up thrust. Your UT. At up thrust, and then right in here is when you start seeing these little, like these tiny up thrusts where just like people are shoving it upward. They're trying to stop out the bears. They're trying to push it. They're trying to squeeze that last little bit of juice out of the fruit before they just unload all their assets. And this just happens here. So boom. And this is over a series of, you know, days from here to here. And is this a better color? Yeah. Okay, and then it bottoms out, and it kind of goes through this like distribution, an accumulation phase. And so let's take a look. Happens again. Okay, so let's see. I wish I could just cover this. Oh, can I do that? Oh God, TradingView is awesome. Okay. So we see this over and over again. So here's another all-time high, and it goes to the same phase. Okay, so it finds a bottom here. The price kind of meanders upward, right? Here's your preliminary supply. Here's your PSY. Here's your preliminary supply. It goes back, and then boom, price shoots upward, and this is your buying climax. Okay, here's your, this one has a second test of the buying climax zone, and then ultimately here's your sign of weakness right here. Sign of weak, SOW, your sign of weakness. Price meanders, and then boom, here's your up thrust one more time, up thrust. Okay, it's the price sees how high it can push upward, and then it starts making its way down to find another bottom, and it does the cycle over and over and over again. So right now we're in that phase. Okay, so if you're comparing it to a previous market, we are right, so here's resistance, we are right here. That's where we are, right in here, right there. So if I were betting man, and I am, I'll be willing to bet we're going to see another strong push up to the upper boundary of our macro ascending channel, and we're going to see a price target of approximately 6,400 to 6,500 before a major correction like this starts to inject into the market. So we got a couple more days of bullish activity before the bears kick in, and it's gonna be sudden and violent. But the way you're gonna know the market is reversing is this whole idea of effort versus result. And I love this. I love this this line of thinking is that, and it works on the bottom, it works on the top. So the effort versus result. Okay, so it's going to typically be a volume climax or a relative high in volume versus the result. So if you see, just like I was saying here, if you look at the 15-minute chart, you see as the price goes up, the volume goes up, but the candle size gets smaller. It gets smaller here as the price goes up. So keep in mind, you know, don't get greedy, but I would be willing to bet that there's gonna be a lot more there's a lot more squeeze left in this bull market before it corrects. And just try not to be the guy that tries to call the top and then get stopped out of your short. You know, the trend is your friend.